Welcome back to Profit Path. Today, all eyes on the Fed rate cut. Alphabet rallies past a major milestone, oil holds steady despite disruptions, and top banks sound a note of caution. Hit subscribe if you want the smartest stock market insights every day. The market's main event this week, it's the Fed's policy meeting on Tuesday and Wednesday. A 25 basis point rate cut is priced in. Investors are keenly listening to Powell's speech on Friday. They're trying to gauge if he'll drop hints about future cuts in the face of sticky inflation and soft lending data. Market watch comments from regional Fed presidents are mixed. Bostic and Williams favor further tightening, while George and Lacker call for pausing. This is in line with the current market pricing. Investors, +1. See our earlier video for details. Now here's what the markets are doing. US futures are little changed. They're hovering near record highs. S&P 500 futures rose 0.4% and Nasdaq 100 futures increased 0.5%. However, look closely. The advance in the last 2 days has been contracting. Volumes are falling too, hinting at a potential consolidation. In Asia, the Nikkei 225 bucked the trend and fell 0.9%. In Europe, Germany's DAX 40 and France's CAC 40 are trading flat. Futures for the Pan-European 600 index is up 0.3%. On Friday, the index hit its highest level since February 2022. Let's come back to the key event, the Fed meeting. Investors are hoping for a dovish signal, something that supports more easing before year-end. But recent comments from Fed officials have been cautious. There's an acknowledgement that inflation is cooling, but worries about the resilience of wage growth, the stickiness of services inflation, and risks from the labor market. Even if the September meeting concludes with no clear guidance, the market will keep looking ahead to the November meeting. This is when officials will update their economic projections. The dot plot will be closely watched for any change in rate expectations. Investors. 1. Alphabet leads the way. Alphabet, the parent company of Google, its shares rose 1.5% on Friday, adding to the previous day's gain. Now, what's driving this? The company crossed a key milestone. Its market capitalization topped $3 trillion. This makes it the third US company to reach this level after Microsoft and Apple. At the start of the year, Alphabet was valued at just under $1 trillion. So much for those doomsday predictions around AI. Right now, Alphabet is riding a wave of optimism, and there's good reasons for this. A. Regulatory troubles seem to be easing. Washington seems to be focusing on antitrust actions against big tech. And B. Momentum in its AI division. Both revenue and earnings have been beating estimates. Key products like Gemini, an AI tool for developers, is seeing strong growth. Key metrics include deal activity and usage across Google Cloud, Search, Assistant, and other Google platforms. Morgan Stanley analysts raised their estimates for 2023 and 2024. They cite improved sentiment on Google's AI investments, better visibility into search advertising thanks to Gemini, and a return to growth in YouTube ads. Other analysts are positive too. For example, Deutsche Bank believes that Alphabet is in pole position to deliver AI products that can scale globally and have wide applications. Alphabet is now a top pick among internet companies. Back in May, we told you how the stock was lagging behind Microsoft and Nvidia. Today, Alphabet is outpacing both. Year to date, the stock is up over 35%. It's one of the best performers in the tech sector. Oil holds firm. Earlier today, Brent crude and West Texas Intermediate both rose above $70 a barrel. Now, both contracts are down a bit but remain steady. Brent is around $68.46 per barrel. West Texas Intermediate is around $64.51. The key story is still the drone strikes on Russian ports and refineries. Russia said that 5 regions were targeted overnight. The Kremlin called it an act of terrorism. We've been covering this extensively in the last few days. Drone attacks on oil facilities are unusual because of the high cost involved. Ukraine hasn't claimed responsibility for the attack. Neither has anyone else. What we know is that this has disrupted Russian oil exports. And even if Russia compensates by exporting more via pipelines, that would tighten overall supply. Russia is a major crude exporter, so the market's worried that this will push up prices in the long run. Reuters is reporting that US crude inventories have fallen nearly 20%, which is adding to supply risks. As we've mentioned, this conflict is not just about oil price volatility, it's part of a bigger risk premium baked into oil prices. Until we see de-escalation, the market will price in a risk premium. Banks flag risks, flag a few red flags. Top banks like Bank of America are sounding cautious. Their warning is mainly based on technicals. First, weak market breadth. The advance in the S&P 500 has been driven by a few large cap stocks. If broader participation doesn't improve, the rally may lose steam. Second, US transport stocks have been lagging industrials. This is seen as a negative omen for equities. Usually, when transport stocks outperform, it's a sign of robust demand and economic strength. Now, the opposite is true. Third, September is historically a weak month for equities. Last year, the S&P 500 fell 3.9%. In 2020, it dropped 5.6%. And in 2019, it declined 4.5%. Late September tends to be the weakest period. So what does this mean? Some profit-taking could be coming. The rally may be vulnerable to a pullback. The market is hopeful, but we have to watch out for surprises. We cover a lot of ground here on Profit Path, from decoding Wall Street moves to explaining economics and geopolitical events and how they affect you. If you're not already subscribed, hit the subscribe button to join our growing community. If you found this video helpful, don't forget to hit the like button. That helps us a lot. Thanks for watching. We'll see you again soon.